some technical analysis now and join Tony Sycamore from IG, who joins me on the desk looking very refreshed after your break, Tony. Markets never take a break. Let's talk about some of the renewed tensions between the US and China, what we're seeing with the Nasdaq in particular, because it's still holding around 24,000.
Yeah, it's great to be back. And as you said, things are still percolating away. We've seen some volatility during the period when I was away, but by and large, the Nasdaq has just brushed it off. The S&P's brushed it off. It is still sitting not far from those highs. You can see the sell-off which we had on Friday. It is a concern in terms of there is certainly a warning signal there, but we haven't seen any downside follow through yet. And I go back to that Elliott wave count we've been working on for a while there, and it is potentially a wave 5, and potentially it does signal a deeper pullback. But we've got to see some follow through down through the lows of that big red candle. So for me, I'm watching for a break below 24,000. If we were to see that, that probably does signal that the uptrend has run its course for now. We're going to get a corrective pullback, and that should lead us back down towards 22,500. But while we're still hovering above 24,000, you've got to allow the chance for it to retest those highs. I mean, you've still got the twin themes which you spoke about, the concerns around escalation of trade tensions, but offsetting that, you've got AI, and you've obviously got some fairly dovish commentary coming out from the Fed overnight, ending QT, things like that. So bond yields, 10-year bond yields below 4%. So there's a lot going right still for equity. So we don't want to be jumping the gun just yet. But for the time being, we need to be careful of those levels which I mentioned.
What about our market? Because we had quite a bit of loss, but a pretty good day today, getting back towards 9,000. What are you seeing in terms of the technical?
Well, it had a wonderful run higher in August. September was consolidation, and the first half of October is also looking like consolidation. So we are close to hitting a pretty strong period seasonally. So my view is we need to allow this correction to play out. But when it does break above 90.25, 90.50ish, that's probably a really good sign that the correction is complete. We can then run up towards 9,200, 9,250. But in the interim, you just have to allow, we're into 6 weeks of corrective price action now. There's a chance of another turn lower back down towards 87.30. So again, let the charts tell you when the move is going to evolve, when it's going to happen. Right here, right now, we're getting back up towards that 9,000 level. So maybe it's not too far away, Jules, but certainly a good line in the sand there for us to keep an eye on.
And the Aussie, I mean, these China-US headlines obviously hit our currency. What are we seeing?
Yeah, the Aussie took a nasty hit, and it actually it has closed back within that trend channel where it spent the last 5 months. So a nasty hit, hit that 64.40 low overnight, and we're back up towards that trend channel of the past 5 months. So for me, while it holds above that trend channel support and it holds above those lows we saw in August around 64.20, and then of course you've got the 200-day moving average sitting at around 64.05. The Aussie, you've got to allow it to continue to trend higher, 2 steps forward, 1 step back, which is what we've seen over the past 5 months. But if for whatever reason it was to break below 64 cents, then I think we are looking at a potential game changer. Until then, play the range and allow it to play out.
We've been monitoring these pictures, of course, coming through from the Middle East. Still pretty precarious situation there. But what's the oil market doing?
The crude oil market's not happy. I mean, it's just shrugged off geopolitical event after geopolitical event. It's focused on increased output. We saw the IEA come out and talk about a 4 million surplus in 2026. And we're also concerned by what's going on with regards to the re-escalation in trade tensions. So things aren't particularly good for crude oil. And once it broke out the bottom of that 6-week range, we'd spoken about it a number of times, that 61.50 lows, you can see there, 3 of them, it broke below there. And I think now we still have to give it the room to explore a retest of the lows which we saw earlier this year, coming in around 55 cents. So while it remains below 61.50-ish and the spike high was around $63 last week, allow the downtrend to evolve. No
downtrend in gold.
No, but where are we at with gold? I mean, this is fascinating now. When you and I sit here chatting about gold, or, we're talking about it in a finance sense, but this has now gone mainstream and it is quite extraordinary. The FOMO is starting to play out there. The RSI at overbought levels. I'm not saying that gold isn't going higher, but I'm just feeling like, when we walk past the bullion dealers in Martin Place and we see queues out the door, that is a concern. And as I said, with the mainstream media now starting to feed this FOMO, I think we need to be a little bit mindful that, hey, potentially we've just run a little bit hard for the time being and we may see a pullback.
And when it comes to Bitcoin, so it's fallen, and this is kind of a little bit of a flash crash.
Yeah, look, the overhang from that flash crash is certainly still playing a part. But what I've put up today there, or the chart we're looking at, is the monthly chart. And this is a monthly chart, which to me has been so important for the fortunes of Bitcoin. It ran up towards that trendline resistance 3 months ago. It's had a couple of tests, and now we've got some interesting signs of preliminary rejection again. Preliminary. Now, if it was to break below 105,000, then that starts to become more interesting in terms of the rejection starting to build into something that may lead us to a pullback into the low to mid 90s. But at this point of time, we have to keep in mind look, we have daily charts, we've got hourly charts, but the one which seems to be guiding Bitcoin is the monthly chart. And now we've got that resistance coming in around 126,500. While it stays below there, you've got to allow this correction to play out.